Now, the Bitcoin ETF, I've always said the ETF doesn't matter unless the market has momentum. If it has momentum, it becomes this sucking sound of bringing in RAAs in the United States and individual investors and pension plans and others. And lo and behold, we're in the middle of crypto spring where things are starting to really warm up. And that sound of FOMO you hear in the distance is thundering closer and closer. And that's going to bring these people in. So if we continue the way we've been going and prices are rising, and let's say Bitcoin's at 40,000, by the time the ETF comes in, there's going to be a blind panic because everybody kind of knows that it's very cyclical as an asset. And that when the cycle goes, it can have tremendous returns. So I think that's going to be in the back of many people's minds who are out of the market right now. And with the Bitcoin ETF, they're going to be more enticed by it. So look, it is very positive. And that capital flow that comes into the space, let's say $10 billion comes in the ETF, whatever, that money then flows into the space. People take profit in their original Bitcoin, it gets reinvested into ETH or Solana or whatever else. And then before you know it, recycles into NFTs, because all of these digital assets is a kind of global economy, a separate global economy made up of smaller economies like ETH and Bitcoin. And once you have new foreign direct investment into an economy, things boom. And that's what's going to happen.
According to Raoul Pal, there's an anticipated rush into Bitcoin and the broader cryptocurrency space driven by a sense of blind panic. He envisions this unfolding within the next 12 months. In a recent interview, the CEO of Real Vision and an expert in macroeconomics elaborated that if the Bitcoin ETF receives approval, while Bitcoin maintains positive price momentum, there will likely be an enthusiastic influx of sidelined funds. Additionally, considering that the Bitcoin halving is merely 9 months away, a perfect storm seems to be brewing for a bullish market trend. Stay tuned until the conclusion of the video, where Pal explains his perspective on the most detrimental mistake in the crypto space, overcomplicating matters by attempting to trade it, and advocates for the simpler approach of identifying the overarching trend and investing accordingly.
I'm not much of a trader, so I take a long-term strategic position. My view for a long time is while I like Bitcoin, I'm more predisposed towards the broader ecosystem itself, because I think the whole of Web3 and crypto is a much larger thing than just a store of value money component, which is an important part of that in itself. And so therefore I've tended to have ETH as my larger bet, and I've had that for a long time because my thesis is these things are all valued on Metcalfe's law, which is network effects, and that's the number of people who use it and then the number of applications really that go on. Now, ETH's equation within that is there's actually more users, the amount of activity is higher because of all the applications, but the sizes of the transactions are smaller. But because so much is being built on top, the network effects grow over time. So over time, I expect it to outperform. But in each bull market, there's something that does really well. And my eye is on Solana because it's got a large ecosystem, a lot of developer activity, a lot of applications layer tools. Now, does that work or not? I don't really know, but I think it's a reasonable probability bet that it's like kind of ETH was in 2018-19, came from the dust down 97% and survived. The Lindy effect of surviving a massive bear market, with all the FTX stuff is a good thing. Could it be another ecosystem that takes fire? Of course, and many will. So it's just a very interesting time. One of the things that I try and focus people's mind on as they get a bit lost in day-to-day price action is $65 billion of venture capital money went into this space in 2020 and 2021. The products that were built are going to be coming out in this bull market. Mm-hmm. So if you remember the last bull market, it's like DeFi, NFTs, social tokens. What's it going to be this time around? We don't know, but there's going to be a lot of stuff because a lot of money went into some really smart teams who were building all sorts of applications and ecosystems. So I've tried various permutations and combinations of this, and I've had broad baskets of stuff. But what happens with the broad basket for me is I don't focus on any of it. So some stuff pumps and I don't take profits, and other stuff, it's not big enough, so it just falls and you don't notice it. So I actually find I operate better with concentrated bets. So really, yes, I've still got a small basket of stuff that I own, maybe 5 or 6. Really, it's all in 2. It's all in ETH and Solana. And then I have a bunch of NFTs on top. And I think that's a relatively safe bet of ETH with a slightly riskier bet of Solana, but not too risky. And I actually, I thought long and hard about this in the last bull market, and I thought it is too complicated a world now and you have to be too technical and you need to be on top of too many things. This is not a Bitcoin ETH only world. So I actually started a asset management firm called Exponential Age Asset Management, which is a fund of hedge funds that invests in digital asset hedge funds, because those guys, it's their job to find the small token that goes up 500x. Right? I can't do that. I just don't have the time or the experience, but it's their job. So the idea is to create a vehicle, a fund-of-fund vehicle, to allow investors, high net worth investors, family offices, institutions, to have a broad, diversified portfolio of hedge funds that can manage that side of the equation. Because I just realized I'm just not smart enough. As you know, it's so time consuming. You can go down any rabbit hole in this space and it'll consume 24 hours a day, 7 days a week. So I've become more focused, more concentrated, use hedge funds for the other side of it. If you're happy to manage a broad, equally weighted basket, you can do that too. I tried it, I just couldn't do it. I just didn't focus on any of it. And so I just didn't do a good job with it. What you need to do is stick with what you've got. As you said, you've got the tailwind of a secular bull market. Now, the advice I do give some people like adrenaline, they like to trade. In that case, keep 80% locked away on your ledger device or wherever you keep it, and then keep yourself a small portfolio of 10% or 20% where you can be an filthy degen and trade anything you want. You can hold as much Pepe as you want, you can blow up, you can do whatever, and that can appease that FOMO thing, because you can always tell yourself the lie that you're going to make this 10% worth more than the rest of the portfolio because you're the best trader in the world. You won't, you'll lose most of your money, but at least you're not screwing it up. I have gone the full journey from left to middle to right. I'm not always right. I'm not always on the right side. I'm not always the Jedi Master. What I've learned is never be the mid-twit. Be the guy on the left who simplifies it all down to, well, crypto's going up. The guy on the right would be, well, crypto's going up, which is your thesis. Like I put out a tweet today. It's like, don't fuck this up. Just if the space is going to $10 trillion, just buy it, right? The people in the middle are arguing about, well, it's decentralized, it's not decentralized this, there's regulation, and oh my God, inflation, and can't you see what's happening to the economy? But the two people on the far left and the far right have it simplified down. The difference is the person on the far right understands all of the arguments in the middle and everything else and has distilled it down to that one essence. Aim to be that person, or if not, aim to be the person on the left. Because it's really the money of crowds that moves things. So if the crowd believes it to be so, it is so, which is why I saw some brilliant people trade Doge so well, because they understood that the power lay on the people in the left. So they would put, maybe the meme would be, the people like Doge, or the people like dogs. The left is that, I want to buy a dog token. The right is the people like dogs. So in fact, you want to. So it's seeing that, not getting involved in all of the over-intellectualization of the space. And that really applies in macro, crypto, everything. People want to sound smart. And sometimes the way of sounding the smartest is to sound very dumb. It's very powerful. It stops you. If you can't explain to yourself really simply, then you've got the wrong thesis. If your thesis is, well, this has to happen and this will happen because this is going to go on, and that's not a thesis. If you can write it down to one sentence, you got a chance. If you can get it down to 2 words, you got a hell of a chance. I've made that mistake. We've all made that mistake. Remained overly bearish because we've had PTSD. My worst year ever was 2009 because I even ignored all of my economic work, all of my work, because I knew that it was all going to come to an end in an even bigger way. Obviously, I was wrong. And I screwed it up badly. It stopped me even being able to buy equities for a long time because I just always had the fear that it was going to go wrong when the answer was just buy equities, right? You know, I was really mid-curving the whole thing. And in 2020, I got it right. So I closed all of my equity short positions and stuff and went long crypto and other stuff. Didn't buy much equity because I've still struggled, but I knew I had to learn to do that because this is my own behavioral bias. And I managed to start averaging in technology stocks over the summer and then really pulled the trigger on everything in November, December, January, February, March, and got the whole lot. I mean, got the NASDAQ and Tesla and Apple and semiconductors and the lot, because I finally got over my bias, because my forward-looking indicators were giving me everything I needed to do. I just needed to drop that bias, that the PTSD bias, and say, My time horizon's longer. I know what I'm doing. Stick with your work. You've been doing this a long time. Buy. And it worked. Investing is all about us being our own enemies. It's the narratives we spin ourselves are dangerous, which is why people just need to educate themselves a bit more on learning how to have an independence of view that can head check your narrative. Your narrative may be right too, right? I'm not saying that everybody's narratives are wrong. You can be really right, but you just need a way of head checking whether you're far away from what you can prove to be true. So there's a very strong narrative now, which is super interesting to me, which is inflation is coming back. This is only the start. Now, I have yet to see anybody put together a chart or any data to show that is the case. What they're anchored on is the 1970s. And what you find is there's actually a political bias that splits with the inflation view. So people who are more conservative in the United States tend to believe inflation is coming back. People who are more liberal don't believe that to be the case. Interesting. So there's a bias written in that whole thing. And it's about the worshipping of Volcker as the hero who broke it. And the markets must get down to P ratios of 6 to be worth investing in. Everything else is a bubble. So there's so many cognitive biases in this. This is the strongest one I've seen in a long time. And I asked because I do an enormous amount of work on this kind of stuff, and I can't find any evidence of a bounce, a rebound in inflation. I don't discount it as zero probability, but assessing the probabilities looks pretty clear to me. And I asked them, well, show me somewhere that you can show me with some forward-looking data where they don't have it. It's a bias. It's a narrative bias. And again, it doesn't mean I'm right, but I'm saying probabilistically, if I can show you 10 pieces of evidence why it's highly unlikely and you can't show me one. So the exponential age is we're going to go through this massive change for humanity. It's probably net amazing for GDP growth in the end. It's also going to destroy jobs, change society in ways we can't understand, change the entire system of money, the internet of value. It's going to change what we understand as scarce resources like human intelligence, and it becomes a scalable resource. So just put money in it. And it will be a bubble. It will end up being a massive bubble, and there'll be a bust, and it'll keep going up because technology doesn't stop. It's the biggest secular trend of all of our lifetimes, and most of us have been mid-curve all the way through and argued that these stocks are overvalued. And it was the stupidest thing, and I've done it all the way through. NASDAQ never touching technology. I don't understand it. It's overvalued. It's nonsense. It's like, but then I look around me, and my computers are better, my phone, every bit of technology. I drive a Tesla. It's got no knobs, dials, switches. It's just a screen. And you're like, really? How much do I use General Electric or AT&T versus this stuff, right? It's a secular trend. Don't overthink it.
As previously highlighted, a confluence of significant factors could catalyze a surge in Bitcoin and cryptocurrency interest over the upcoming 12 months. From the potential green light for the Bitcoin ETF to the impending Bitcoin halving, the stage is set for an intriguing chapter in the crypto narrative. Raoul Pal underscores the potency of simplicity and backs the notion that investing in clear victors remains a potent strategy amid the dynamic crypto sphere. Before we conclude, let's take to heart Pal's pearls of wisdom, eschew undue complexity in the crypto realm and focus on identifying the prevailing trend. For trading, although tempting, might not be the optimal route due to the inherent volatility and unforeseeable twists inherent in the crypto market. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.